Hello and welcome to this Moneycontrtol live stream. You're watching Opening Bell with me, Nandita Khemka, Tuesday morning, and it's the monthly FNO expiry for the Nifty. Yesterday, we got a sense of how volatile really markets were. It was actually looking like volatile, expiry day feels yesterday. Because we did hit a intraday high of 24,791 or thereabouts, but we cooled off quite significantly from there. In fact, ended even below the 24,650 mark. So to understand the setup, we will be getting us, World Energy Solutions. These are the three new listings when it comes to the new debutants on the Lal Street. But on that note, quickly bring on board our guest for today, Ajit Mishra, technical senior VP Technical Research at Religare Broking. Ajit, always a pleasure chatting with you, and now more so given the fact that we are in the middle of the festive season and today is Durga Ashtami. So wishing you a very happy Navratri. Sentiment on the Lal Street not all that great this festive season. Yesterday we were attempting a rebound, kind of fizzled out. One would have got the expiry day feels yesterday itself, given the kind of volatility we saw. But today also marks the end of the first half of the financial year. It marks the end of September as well. And of course, it marks the end of a quarter as well. So, how do you expect things to pan out here on, and what are the key support levels to watch out for, especially in today's session, given the fact that it's the first monthly FNO expiry on a Tuesday for the Nifty?
Yeah, good morning, Nandita, and I wish you, your entire team, happy Navratri. And yes, you have rightly said that it's a kind of like a roller coaster ride yesterday itself, and the last week, it was almost whatever gains that we have accumulated 3 weeks prior to that. We have almost surrendered 60 to 70% of those gains. Now, the sectors which were holding strong, selectively we have started seeing some profit taking uh, in those as well, means auto metals which were leading from the front. After this recent decline, we have breached the critical supports, when it comes to the Nifty index, 20 EMA, 100 EMA. So consolidation is likely, but upside seems capped, means the two key sectors, banking and IT, they are completely on the back foot. Means yesterday there was some respite in banking also, but the private banking majors are not at all participating in this rebound. It was the PSUs basically which are holding strong. So in such a scenario, consolidation with the negative bias is more likely, and closer to around 25,750, 800 area is where again we may see pressure coming in, with the downside support at 24,600, 500 for today's session being the monthly expiry. So it's likely to be consolidation with a negative bias for the index. But stock specific, still we have certain pockets, like yesterday it was OMCs and select stock from the metal basket which were holding strong. So again, one needs to be selective when it comes to the sectoral pick. But overall market texture looks sideways to negative.
Sideways to negatives. There was a point in time when we were making higher highs and higher lows, but that scenario has completely reversed now. But let's talk about the PSU banking lot. It's 9:10, 5 more minutes to go for the markets to open. We've seen good traction in PSU names, and a lot of experts that I have spoken to have also pointed out that margin-wise, PSU banks are better poised versus private peers. And there's a catch-up play that's ongoing. The PSU banks are actually staging, catch up with their private peers. But any names that stand out within the PSU lot, banking lot right now, the likes of SBI, Canara Bank, what should one do with these kind of counters in this up move?
So certainly the leader from the PSU banking space, SBI, almost after 2-3 months of consolidation, we have recently witnessed a breakout. There was a marginal pullback also after retesting its record high zone, and yesterday again it was a strong closing, roughly around 1.5%. As a disclosure, we have recommended this to our clients also. So we are anticipating this positive momentum to continue, and I'll not be surprised in case if we make a newer high or cross 900 plus levels, 910, 920 in the near future. So yes, one can look to accumulate the stock at the mentioned level with the 950, 850 as a stop loss area. other from the PSU bank, bank like Canara Bank, Indian Bank, Bank of Baroda, they are among the top performing name. Avoid the laggards, means UCO Bank, IOB. We receive queries around that. Can we buy the uh, stocks which are still struggling or in trading around their recent lows. So avoid the laggards from the performing sector. Stick with the top names.
All right, stick with the leaders when it comes to PSU banking names. The likes of SBI, of course, fresh breakout being witnessed on the charts and poised for levels in excess of 900 to 950. That's the view on PSU banks. But I know just about 3 minutes to go. I just want to get past your recommendations that you would be having for our viewers this morning. Aside of these names that you just mentioned, SBI, any other recommendations for our viewers?
Yeah, so OMC as a pack is definitely among the best performing name, and BPCL after the recent consolidation, we are seeing a fresh buying pivot formation. Yesterday it settled around the day's high. Volume was almost double to the average volume. So every indications are in the favor that this rebound is here to stay, and 350 to 355 is the target zone. So with stop at 330, one can accumulate BPCL. At the same time, one should not get carried away with excessive longs. So yes, maintaining few shorts also. So Bandhan Bank, after this rebound, like what it experienced yesterday, we are again closer to the resistance mark. So here one can look for shorting opportunity around 165 area, means on slightly higher level from the current close, with stop at 170 and target of 155 again.
All right, those are the recommendations. What do you do with some of these auto names? As you mentioned, they have come under some bit of profit taking off late. Just going through the charts of three automakers in particular, the likes of M&M, Maruti, and Hyundai. Maruti and Hyundai have, of course, outperformed M&M by almost double the kind of gains that M&M saw in the last 1 month. Hyundai is up 8%. I think even Maruti is up somewhere around 7% or thereabouts. So in this bout of profit taking, if you had to suggest one stock that's a buy on dips among the three, which one would you look at, Ajit?
So I would prefer M&M because, as you rightly mentioned, that the recent momentum means comparatively it was less, though the stock is still trading around its record highs. There's a gap around 3300, 3320 zone, so it's likely to get filled. So around that area, it's a good buy because we have multiple support when it comes to the different time frames around 3300, 3320 zone. So in case of any 100 points down from the decline from the current levels, it's a good opportunity to accumulate with 3200 as a stop loss and 3600 as a position target.
All right, that's the view on M&M. That's the preferred bet from the auto space from Ajit. But Ajit, who would have thought we're looking at is Tata Motors, and this stock has been grabbing the limelight for every single day. I think since sometime last week there was that cyber attack issue. Then they said that they will be starting their production in a phased manner. So yesterday there was an analyst meet there as well. They have given some commentary, and the stock is the top nifty laggard. HDFC Life, ITC, Eternal, SBI Life, Tech Mahindra, SBI also among the laggards today, some profit taking there. L&T also among laggards. But let's talk about IT, particularly Coforge. Your thoughts on mid-cap IT after the drubbing that some of these names have seen? What would you do with them, particularly the mid-tier ones, including the likes of Coforge?
Samantha, we all know that the kind of volatility that majority of the auto, IT stocks are experiencing, not only due to this visa boost, but at the same time, post the Accenture guidance that further, rubbed off most of the ID names in a wrong way. So, yes, there could be a bit of a rebound every now and then, but sustainability is the key. So, both pharma and IT is something that we are refraining from any aggressive longs. In fact, Infosys, despite having this buyback in place, is struggling, to maintain at higher levels. So this indicates overall negative sentiments. So until we see some decisive sign of a recovery or a reversal, one should refrain from any short-term buys, when it comes to the IT pack.
Okay, that's the view. I want to move on to another stock that was a big volume buzzer yesterday and saw very good gains as well. Not only did it recoup all of its losses from Friday, it kind of built on those gains as well. Work hard. It was up 15% yesterday. Should one buy into this? Is that a fresh leg of up move that started in shares of Work hard? How are you looking at yesterday's move? And today, I think it's down somewhere around 3%. What should be done? I think we had a couple of queries also on this name on our feed. Naveen wanted to know your thoughts about this particular counter. What should they do now with Wokhart?
So, what we were discussing about both IT and pharma were in news for negative reason, and now we are seeing bit of a stability. Means Wokhard is among the top performing name, especially if you talk about the recent consolidation, it was strongly holding above its major averages, excluding the day a couple of days before, when we had this branded drug tariff announcement. But yesterday it rebounded very strongly with volume. So this indicates strength. Those who are maintaining long position, they should continue to stay put. 1420 now on the closing basis should be their stop loss because it's a high beta counter. So 100 points is something that you should maintain and stop. And the record high zone close to around 1850, 1900 is something that you should maintain as a target. So risk reward is favorable with 1 is to almost 3 as a ratio. So you can continue to hold your longs with stop at 1420.
Okay, keep a stop at 1420 on Wokhard, and it's a good hold at the current juncture. But let's talk about some of the defense names like Bharat Electronics and HAL. HAL just bagged that Tejas jet deal from the government, and yesterday we had Bharat Electronics also bagging a 30,000 crore rupee deal from the Indian Army. There is additional order win of 1,000 crores since last disclosure on the 16th of September. Both these stocks, are seeing good traction. There is renewed momentum in defense names, and Bharat Electronics in particular, just about 35 rupees away from the 52-week high as well. What are the levels here to watch out for, and would you expect any kind of a fresh breakout here on? Do you see more room for these kind of stocks to rally here on?
So yes, when it comes to the defense pack, we've seen decent rebound, across the board. But off late, we were seeing that majority of the names were either surrendering the gains or witnessing bit of a profit taking. While HAL and BEL, they are still holding up their short-term averages. So this clearly shows strength. So definitely the top 2 names is something that you should keep on your radar when it comes to the defense play. For BEL particularly, this 395 is a strong base zone, so that should be a stop loss for your long position. You can in fact look for fresh buying also. The intermediate high closer to around 416, 417 is something that the stock might face some resistance, but eventually the stock has potential to retest its record highs around 428 or maybe higher. So yes, you can hold your long position in BEL. HL also, or similar structure, means we are maintaining above the short-term averages, though the momentum is slightly higher in BEL. Here, 4690 is critical to hold. In case if it manages to hold this level for a couple of days, probably we can see the next leg of rebound in this stock too, towards 5,000, 5,100 levels. So with stop at 4690, here one can continue to hold the longs in HAL as well.
Okay, that's the view. The 2 leaders, BEL, HAL, looking good on the charts and are worth holding on to. I want to get your thoughts on a PVR Inox as well. I personally don't know what the impact of Trump's tariff on movies outside of US. Of course, he slapped new tariffs. I don't really know how it really what it really means for the entire media sector, but PVR per se is under pressure. Do you see a case in trading in a stock like PVR? The stock has been under continued selling pressure in the last 1 month. How are you looking at this stock now? I think it did stage some kind of a rebound, but last 1 month hasn't been all that great for this counter.
That's true. And in fact, Nanda, if you see that it's been almost 8, 9 years now that the stock has been experiencing this sideways consolidation, means from the highs of roughly around 2100 mark. Uh, it made a low around 705 in 2020, mid of 2020, and then again scaled towards record highs, followed by a similar decline towards the previous swing lows. So this seems like a broader time-wise, price-wise correction, and this scenario would only change once the stock decisively reclaims 1400 mark on the closing basis. So as of now, I'm not seeing any sign of decisive recovery or reversal. So one should refrain from any aggressive long. In fact, if you have any existing position, a close below 1050 is something that you should consider as a trigger to exit those long positions.
Okay, that's the view on a PVR. You know, another stock that was buzzing yesterday was Reddington. In fact, it has been buzzing. We've had the new iPhone 17, picking up pace, sales in India, etc. We have a couple of queries on this particular counter coming in from Nana Prakasam. He's holding Reddington at the rate of 265. I think somewhere around 720 or so. That's 1720. That's the quantity. Wants to know whether he should hold on to it or book profits. It has seen a sizable uptick today. Of course, it's cooling out a bit. But is it prudent to wait it out, or kind of look at booking some kind of a profit? 20 rupees, that's the kind of profit he's making on this counter. What would you advise?
So, Nanda, it's been almost 2 months now that the stock has been experiencing volatile swings, means from 315 to roughly around 230, and then again to 310 highs. Of late, it was, till yesterday, trading around the middle of the band. Yesterday, it was a sharp rebound followed by a muted start today. So, partial profit taking can be booked because it's a high beta counter. There's no point waiting on sidelines and wait for further up move. And do maintain a trading stop at 270 for the remaining position. On the higher side, 315, 330 is a zone basically where one can maintain as a target. But yes, it's a high beta counter, so it's prudent that at least partial profit should be booked.
Okay, partial profit should be booked on a Reddington. Hope that answers your query. Let's take up a query on a Coal India and an Oil India. This one's coming in from Haresh Thakur. Wants to know your thoughts. Oil India, of course, on the back of the discovery that was made in the Andaman. That stock saw good traction yesterday, today as well. Stock is in the positive. How should you approach this stock and Coal India as well? Any thoughts there?
So both stocks, I believe that they are setting the stage for a next leg of recovery, sustained recovery rather. Because after a sharp correction, from its record highs, means Coal India from roughly around 510 to 340 levels. It's been almost like 9 months that stocks trading in a very tight range, and off late it started, maintaining its position above the multiple moving averages. So indications are in the favor that we are witnessing accumulation phase in Coal India, and we'll have a confirmation once the stock crosses 405. So yes, you can also participate during this accumulation phase with a time horizon of, let's say, around 3 to 6 months at least, with a closing stop at 370 now. That's the strong base. And in case if you wish to play only momentum, then you should wait for a close above 405 to enter fresh. Oil India, almost similar kind of a structure, means a consolidation after a corrective phase. Of late, we have started seeing the stock gaining traction. Multiple attempts to reclaim the major averages, with volumes, but currently it's hovering around the same area. So a close above 420 can trigger the next leg of a move towards 445, 450. So here also one can stay put with 400, rather 405 as a stop loss. for long positions.
Okay, that's the view on Oil India and Coal India. I hope that answers your query. I want to take up a query on an RHI Magnesita. This stock has been under pressure and for quite some time hasn't really been able to come out of the selling pressure that has seen over the last 1 year as well. It's down 30% for the last 1 year. We have a query on this particular counter from Satya CK. Wants to know your thoughts on whether one should look at fresh longs in this counter. Do you think it has found its floor, or do you expect this weakness to continue, and is it an avoid right now?
So this stock, in fact, seems like fresh breakdown from the consolidation range around 460 area, and since then we are seeing this gradual decline to continue. Though the volumes are very dry, but still, yes, the tone looks negative. Marginal pause is possible around 428, 430 levels, but since the tone is negative, definitely you should refrain from any long position, fresh long position, or adding to your existing longs. Uh, to change the bias, we need a close above 500. Otherwise, the sideways to negative tone would continue, and probably the stock can drift below 400 mark also in weeks to come.
Okay, that's the view on an RHI Magnesita. Hope that answers your query. Ajit, I know we discussed autos. We discussed the fact that M&M is your preferred pick from the auto space. But, I have a pointed query on a Hyundai Motors India from Mukul Ved. He wants your thoughts on this particular stock for the next 1 month. We know that some of these auto names have come under pressure, but Hyundai has seen good 50% up move in the last 6 months, 7-8% in the last 1 month. Now, of course, some bit of profit taking there. But for the next 1 month, if somebody has this counter, what should be the level and when should he book out of it?
Yeah, so it's not that Hyundai is not looking good, but the challenge is that, as you rightly mentioned, that the move was almost vertical, in the recent rise, and now we are seeing profit taking. A break of 2600 can trigger next leg of the down move, which can push the stock towards 2460 or 2400 levels also maybe. So it's going to be a healthy consolidation, a correction, considering the kind of move that the stock has experienced. So basis that, in case if you have any existing position, 2600 on the closing base should be your strict stop loss. And on the higher side, 2760, 2780 is a zone basically where we have the immediate resistance. The short-term indications are more in the favor of consolidation or profit taking. So upside seems limited. So it's prudent that you should book profit or wait with the strict stop loss that we have recommended at 2600 mark.
All right, that's the view. In consolidation phase, 2600 key level as a stop loss on a Hyundai Motors. A couple of queries then. Let's take one up on Torrent Power. Coming in from Debu K wants to know your thoughts on short-term investments in this particular stock. This stock has also not been really in favor. It has been in kind of consolidation mode in the last 6 months. It has lost 18%. No real recovery because it's very close to its 52-week lows as well. So, is there a case to look at this stock for the short term?
Nanta, in fact, we are very close to the previous swing lows, close to around 1205. The stock made a low around February 2025. And in case if it fails to hold this area, then probably this decline or profit taking may extend. So as of now, one should avoid for any fresh long. Wait for a close about 1290. Then only you can consider for fresh long with 1400, 1420 as a positional target.
Okay, that's the view. I hope that answers your query. We have a query on a Varun Beverages that has been a rank underperformer, so to say. Just going through its charts as well. No fizz really, no spark as well on the stock. But we have a query from Mr. Thiagarajan. Wants to know your long-term investment view on Varun Beverages based on the current market price. Is it a good time to buy now? Would you advise looking at such a stock down 31% on a year-to-date basis?
Yes, Ananta, as a disclosure first that we have recommended this to our clients for the long-term investment, and we're still holding that view. Yes, the recent price action is not very conducive, means the stock is struggling and we are again back to the previous swing low. So there could be further consolidation around 440, 430 area. But again, since we are inching towards the earnings season, obviously that would be the next major trigger for the stock. So as of now, in case if you have any existing position, you may continue to stay put. But for any momentum, we need some sign of decisiveness above, let's say, 470 mark or something. So until then, the short-term bias may continue to be on the lackluster, or means we might continue to see further decline as well. But the long-term bias is still positive, basis the fundamentals.
Hmm. Okay, that's the view on Warren Beverages. Hope that answers your query. Let's take up a query from Geetu Sandesh on Apollo Hospital for the long term. The stock has seen some kind of, profit taking in the last month. I think since mid-August, the stock has come off almost 5 odd percent. Uh, is there a case to look at this stock now? Is it a buy on dip? It's at 7,430.
Yes, if you see the entire pack, the healthcare space, they are steady performers, and there's a marginal decline in line with what we are seeing in the index, but the quantum is less. So all these factors are pointing towards the possible outperformance once the market resumes the trend. So yes, you can continue to look to accumulate the stock at current levels, add more in case if the view is long term towards let's say 7,200 mark, and stay put. In the next swing, I'll not be surprised that the stock may, cross 8,500 or 8,700, in the next 6 months to 1 year.
Okay, those are the levels to watch out for on on an Apollo Hospital going forward. But let's talk about Blue Dart as well. I can see the stock is up 9%. It is looking to increase its prices, as far as I know. Average shipment price in the range of 9 to 10%, 9 to 12% from the 1st of January 2026. Sharp reaction. The stock is up 10% now. How would you play into this breakout move, Blue Dart?
Nita, it's a rebound from its critical support. So broadly, if you see, that's been almost nearly 3 years now that the stock has been trading in this band, 5,500 to 9,000. So off late, it
Hmm.
retested the lower band, and now we are seeing a rebound with decent volume. So yes, it's a rebound play with 6,400 being the immediate target, and then around 7,000 mark. So with closing stop at 5,800, you can, if you are okay with high beta counters, definitely you can consider going long with 6,400 as the immediate target, and then around 7,000.
Okay, that's the view on a Blue Dart. Let's talk about some of these spirit makers as well. Global Spirits, of course, it is in news on the back of the fact that it has unveiled world's first premium vodka, Terai India Craft Vodka. No, the stock is not really in high spirits, so to say, right now. But given the recent moves, how would you look at the likes of United Spirits, Global Spirits? Do any of them look appealing on the charts?
So United Spirits definitely looks comparatively better, but still in both the names, largely we are seeing consolidation. Radico, in fact, among this basket, which was uh, trading from the front, and there's a marginal pullback here. So here one can look to accumulate Radico in this range of around, well, let's say 2,800, 2,850, with stop at 2,750 and 3,050, 3,100 as a position target.
Hmm. Okay, those are the levels to watch out for on Radico as well. That's about the liquor space. But last couple of stocks then, how would you look at into a Sammaan Capital? Yesterday it was out of FNO ban. Today again it's in FNO ban. But the stock has been on a tear. In the last 1 month it's up almost 27, 28 odd percent. Is this the time to chase the momentum in a stock like Sammaan? Would you advise that?
So in this week so far, it's roughly around 16% up, and we are very close to the critical hurdle of weekly 200 days of exponential moving average placed around 163. It made a high closer to that mark, so I feel rather it's prudent to book profits if the view is short term and let the stock stabilize above 163.64 decisively at least for a couple of days for the next leg of the rebound, let's say towards 180 or 200 zone. So as of now, the prudent approach is to book profit and sit on sidelines for clarity over the next direction move.
Okay, that's the view. As of now, it's time to sit on the sidelines when it comes to Saman Capital. But there are some names from the EMS pack that have been under pressure in the last 5-6 sessions, the likes of Dixon, Keynes Tech, etc. There are some reports that Trump could train his guns on the semiconductor space next, and 5 to 6% of the revenues on the exposure to US for these companies, Keynes and Dixon Tech, etc., ranges from 5 to 6%. I think that's why the stocks of course have been under pressure. How would you deal with these stocks now, the likes of Dixon Tech in particular?
It's a very sharp reaction in the last three trading sessions, means a sharp decline, and now we are inching towards the long-term averages when it comes to the Diction technologies particularly, wherein 15,000, 15,500 is a zone basically where we have multiple supports. So yes, you should refrain from any aggressive long at current levels. In case if you have any existing position, also it's prudent that you should book losses, sit on sidelines, let the stock stabilize, because the breakout attempt, and the kind of move that we were seeing it earlier, it was not very decisive. So this reaction indicates a possibility of pattern negation and probably a retest of 15,000 levels in the near future. So the prudent approach is to avoid any fresh long position, and existing position also you can exit current levels and wait for clear sign of recovery or consolidation.
All right, wait for clear signs of a recovery on Dixon Tech. But let's talk about some of these FMCG names as well. Yesterday we saw HUL, it slipped somewhere around 2% on the back of its quarterly update, but managed to recover from the day's low. But all these FMCG names, they did see a spurt at the time of the GST rate rejig announcements. But they've cooled off, and that's what happened when the tax cuts were announced in budget as well. For the first couple of days, we saw a lot of traction, but then all faded out. The same thing happened this time as well. Very flattish for some of these names like HUL, ITC, Marico, etc. Anything that you like within this space, FMCG, that has some bit of room to rally from here?
So yes, Nanta, if you see, from the sectoral point of view, definitely it's not very lucrative, considering the kind of underperformance that the sector has been experiencing. But at the same time, we have certain stocks like Britannia, which has done well, within the basket. Then we have Marico, wherein we are seeing strength comparatively. At the same time, the usual names like HUL, Kolpal, they are witnessing pressure on rise. So as of now, I feel that stick with the top performing names within the sectors like Britannia and Marico, in case if you're planning to accumulate. But keep the exposure low, considering that we have metals, auto, PSUs selectively from banking, OMC space. If the view is short term, are offering better risk to reward ratio and strong momentum as well.
Right. Stick to the ones that have been doing well from the FMCG basket, the likes of Britannia and Marico. But with that, Kunal, I beg your pardon, Ajit, would like to thank you for taking out time and joining in this morning. Of course, I'll touch base with you again soon. But wishing you a very happy festive season, happy Navratri and happy Dussehra in advance. Hopefully, we will touch base again next week. So have a good week till then.
Thank you, and thanks, Indy. Thank you.
Thanks a lot. Taking a look at the market then, we have kind of cooled off slightly from the opening highs, up now 30 points or so below that 20. Of course, don't worry, we'll be back with the fresh set of experts at 3 p.m. To take stock of the market close and the last hour strategies as well. So don't forget to tune in for that at 3 p.m. But for now, it's a goodbye from me and the entire team that put the show together. I'll see you at 3 p.m. Have a great trading day and come back again. Thank you for watching.